Altona Mining, the next copper gold producer from 2019 onwards. And it's so great to have here. Let's talk about copper. Why is copper so hot? And then let's dive into your project.
It's great to be here again, Jochen. Well, copper is a very simple metal. Everyone's familiar with copper. It's in your plumbing, but most commonly in your wiring. Everything electrical contains copper. Everyone in the world has a copper device, whether it's a washing machine or a car or whatever. And the world's moving to more electrification, means more copper. The world demand for copper grows at, say, 2-3% per year. That's a lot of metal. We've got to find more, and hopefully we're going to help with that.
Absolutely. If you say the demand grows by 2-3%, what is the development of the supply? Are we getting into a deficit, or are we already in a deficit?
We probably have an oversupplied market at the moment. The market's doing it tough, largely because there's been no disruptions to supply that we normally see, earthquakes, strikes and so forth. But there's no new mines being built at the moment, so very quickly we'll find the market turning to deficit and a lot of pressure upwards on copper prices.
So that means higher copper prices. Fantastic.
Let's hope so.
Which leads, of course, to our next slide, and that's your fantastic little Eva Cloncurry project. And we see here on this beautiful map where it's located and also the great infrastructure. Maybe give us a little insight in that now.
Copper mining has been going on a large scale in the northeast of Australia for 100 years. There are refineries, smelters, big world-class mines, and consequently the infrastructure's there. Roads, railways, power stations, gas pipelines, and most importantly, skills. There are a lot of skills in the area. So starting a new mine here, everything you need is there, as well as a supportive government and a very stable fiscal and environment in Queensland.
Fantastic. And of course, starting a new mine means it costs money. Altona has not have all the money in place, but you have a very prominent partner from China. Who is RIC?
Sichuan Railway Investment Company, a state-owned enterprise owned by the provincial government of Sichuan. This is a large state, probably an economy the size of France. Chengdu, the capital, 14 million people. This group, big industrial group, construction engineers mainly, build railways, doing something like 4,000 kilometers of elevated high-speed railway, motorways, toll roads, and other infrastructure. How many roads can you build in China?
A lot.
There's a lot, but they want to diversify. And so they're looking to do things in other industries, and mining is one they've chosen. They have the capacity, the AA+ rated by Moody's. Most governments would die for that.
Love to have that, yeah.
So they're liquid, they've got lots of money and a strong desire. They're looking for a good place to learn about mining, and that's with us in Australia. So we're delighted to have them as a partner.
Great. And it means also to me, this is a real partner for sure. Yeah, I mean, it's not like something of the fancy stories you hear all the time. Oh, we have a Chinese who wants to invest. Those are real people, and that's important. Can you give us a bit more about the transaction details? I mean, you were not going to a bank. You have this partner. Why have you chosen this way?
I think people who are familiar with small companies, big projects and startups will have encountered many failures, and they're usually due to debt. Something goes wrong technically or financially in a project, you've got a lot of debt, and shareholders lose a lot of money. What we deliberately did is go and look for someone who would participate at the project level. So we give away equity in the project for cash. And that cash comes in upfront on closing of the transaction, all upfront, so the company will have more than enough money. The Chinese will be writing a check for over $214 million US. This means that the project will be financed to construction, all the way through construction, and with working capital beyond construction. So it's financially de-risked. Now, often when you borrow money from a bank in a project, what you do is spend the first 5 years paying back the bank. The other thing is much of the upside in the project's removed because the banks will force you to hedge the commodity. So you're never going to benefit from a rising copper price, and also in this case gold price. They'll be hedged away. So it's financially de-risked. And on day one, when you're in production, you start making money, you're making money. You're not paying the bank, the money can then flow to shareholders. Yeah,
exactly. And you also can disseminate the money to the shareholders. And we saw it also, 50% of the profits shall be disseminated. Now we have looked at the financial side. Let's go a bit more into the project side. I mean, what are you building? It's not small really. You invest almost 200 70 to 280 million Aussie dollars. Yeah. So what is the project about?
It's actually a very simple thing. It's a very large open pit, probably 1.6 kilometers long. It's about 240 meters deep, a big excavation. It's big bulk scale mining, big trucks, big excavators, and then a huge processing plant that processes 7 million tons of ore a year. That's a lot. Low grade, but it relies on low grade, high efficiency to make money. It's essentially technically very straightforward. This model of project is quite common. There's nothing new, nothing innovative.
No rocket science.
No rocket science at all, just geological and mining science.
Yeah.
But the biggest risk would have been financial, and we've removed that. So it's a simple project, and it's going to produce a lot of copper. The amount of copper per annum is around 40,000 tons of copper per annum. And to give people a feeling for what that means, if you multiply that by 4, you've got it roughly in terms of a gold equivalent. So say something like 160,000 ounce gold mine, roughly. So it's a substantial mining operation with a 13-year life.
But also as a byproduct, you have some gold, right?
Yes.
Yeah, it's like 17,000 ounces. I mean, that helps also, right?
17,000 ounces of gold, essentially for free.
Yeah, great. Let's talk about some economics, of course. You have done the definitive feasibility study in 2014, and this was, I would call it a little bit of a different environment, which was more high-price environment. Please elaborate a bit about all in cash costs, etc., things like that.
Well, as you said, we've done all the studies and permitting and everything to bring the project into production. Missing ingredient is money, and that money hopefully makes money. This project is quite financially robust, but as you mentioned, the pricing was all done really at the top of the market. When mining services, construction projects, mining contractors were all very, very expensive. All those margins and prices have collapsed when the mining boom collapsed. So we expect to see significantly better, lower capital and operating costs, which will flow through to the bottom line. I'm reluctant to say too much about it because when we get the joint venture formed, the first thing we'll do is we'll optimize the project and get definitive costings from doing the front-end engineering, and then we'll know just how much better it is, but it will be better.
Alistair, thank you very much. All the best for the drillings, and we look forward to the results then. And bring it in production.
It's always a pleasure, Jochen. Thank you.
Thank you. Ladies and gentlemen, that was Dr. Alistair Cowden, the Managing Director of Altona Mining. And well, you heard it. Copper is hot. Copper is on the spot. We are going into the deficits now in the markets, and that's exactly where the company is placed. And they want to start the production by 2019 with their Chinese partners, RIC, and we are quite confident that this works. And but beside that, they have great exploration ground, and we are also pretty sure that this will be a hit again. So thanks for watching us, and I'm your host Jochen Steiger from Commodity TV in partnership with Dukascopy TV. Bye bye from Geneva.